Ladies and gentlemen, welcome to Only Trade to Win. I do not know where the market is going today or the next week, and I do not have any buy or sell recommendations, but what I do have is a methodology that took 25 years to put together, and the intent of the show is to share with you how a professional investor and trader thinks like, so you can take some things that resonate with you, implement it in your own style, and become a more profitable investor. So let's start with important things first. Here is the picture of Philadelphia Semiconductor Index. First, we look at the strongest index, which is the Philadelphia Semiconductor Index. And this green arrow indicates that from October 2023 until the closing price yesterday, March 5th, 2024, the index is up 53%. So if we take the bottom on October 31st, 2023 and go all the way to the top, we can see that this index made its all-time high just the other day on March 4th, and this is the first down day. So there is nothing significant or nothing abnormal about it. It's just a normal. And if we look at the stocks, here are all the stocks that are components of this semiconductor index. And if you look at them, I sorted them by change in percentages. So you can go right here. If you click this column, it goes from the gainers down to losers. If the arrow is up, it goes from losers up to the gainers. And here is their biggest loser for yesterday. That was QRVO. And the second one is Intel. And this is something that we've talked about before. Intel has big problems. Let's go and look at Intel's problems. Here we go on earnings. We click on E down here. If you are on the daily interval and you click down below on this little green box E, then another box pops up and it tells you how much the company made last quarter in terms of earnings per share. So each one share earned 54 cents. So if you had one share, you get 54 cents in earnings. 1,000, you'd get $540 in earnings. Now, this money is not paid out to you altogether. What you get in cash is what the company pays out as a dividend. So you get 0.125. And that means out of 54 cents that the company made, they decided that we are going to pay 0.125 per share out to our shareholders, and we're going to keep the rest and reinvest in the business, which is a great thing because when the company reinvests money without paying it out, there is no tax payment, so it's really efficient. And the companies have abilities to earn money, and it's a good idea to leave the money inside of the company that is earning money, which is not the case with Intel. And we go on overview. It's an old established company. It's a great company. Pardon me, it used to be a great company. Here you can see the value of the company is 4.23 billion, or market cap is the term that is used to describe it. We go on valuation ratios. Okay, they're showing PE 125. The company has shown profitability. We scroll down to performance, and here you can see this orange line. This is the margins starting back in 2009. So on every dollar it sold, its margin was 29 cents. So you can see that net margin orange 29.25%. Then we go in 2020, still nice margin, 26%. 25. Now they're showing margins of 3.11%. They're showing it positive. Before last quarter, it was negative. So Intel had a really nice fourth quarter, but up to the fourth quarter, the company was showing that they were losing money, and it was a big concern. So we scroll down and see the revenue, cost of goods sold, gross profit, operating expenses, they get a refund. Let's go to statements. Annual. We are looking in income statement. We're going to scroll down. Pre-tax income, $762 million. Last year, Intel had $7.7 billion in taxes, which was 64% lower than the $21 billion they had a year before in 2021. And that was 13% less than $25 billion that they had in 2020. So the company pre-tax income, and that means that everything that they sold minus all the cost of goods and all other expenses, this is the important number. It was $25 billion, and here it's $762 million. It calls for a calculator. So this is what we do. The $762 million that they make right now divided by 21.7 billion that they made 2 years ago, 0.03. Okay, they lost 97%. The pre-tax income of 97%. Here's the question that we need to ask. Is it a good investment? Oh, let's say it like this. Is it a good idea to invest into a company that is a part of the hottest industries in the history of industries, the artificial intelligence, but actually the company saw a 97% decline in income? Once you answer that question for yourself, you can decide if you want to invest into a company or not. And I think if you're investing into Intel, this is definitely a speculation. One thing that I need to point out, let's just go back real quick to the financial statements. I realized something after I close this page. So again, I select daily here for the interval. Down below where you see the green square little thing with the triangle roof, like a little house, you click on that, the box pops up, and in this box you click on more financials. In here it opens up all the financials, all the statements that Intel filed, and here we click on statements. We scroll down a little, here we go, we press annual. Once we press annual, we can see all the financial information for Intel going back to 2017. Here's 18, 19, 20, 21, 22, and last year is this year, 23. Income statement. If you want to see balance sheet, you click on this. If you want to see the cash flow, you click on this. You scroll down. We are concerned with the income statement right now. We're concerned with the income statement right now, and we would like to see the number that is reported to the government. Pre-tax income. That means the company says, okay, this is how much it costs us to run the business, make all the goods, ship it out, sell it, pay the commissions, take care of all our expenses, making the business run. And at the end of the day, we made $762 million. That's 2023. Let's scroll up. I'll show you again. 2023, December 2023. Scroll down. We're looking at the last line, and here we look at the pre-tax income. We look at this number, and we go and we look at the next number to the left, and they say, wow, look at this thing. This thing lost 90% of its pre-tax income between years 2022 and 2023. And then before then, it was a 64% loss, and then there was a 13% loss. So this company is in huge financial mess. From selling 21 billion, now they're selling 762 million. And that profit came from, okay, we have pre-tax income of 762, plus they had a tax refund. Look at this, guys. Taxes, question mark. Let's see what it says. If you click on question mark, it says, do taxes represent? It represents all income taxes levied on the income of a company by federal, state, federal governments. Federal, state income, all the taxes, okay? So instead of paying to the government, Intel somehow receives almost $1 billion from the government. Now, if you take into consideration previous year, then they received over $1 billion back from the federal government of the United States of America. Intel is a strategically important company. It's an old company, and its chips are found pretty much everywhere. $1 billion in refunds, a nice chunk of change. In any case, we looked at these stocks. Wolf is going out of business because they're losing money like crazy. You know, if you are looking at a short stock or an option to short this WO, it's down a lot, but the amount of money they're losing is just insane. Look at it. Lost 328 million. That's pre-tax income, 328 million. And if we go into overview here, $3.3 billion. So it still has quite a ways to go, but look at this earnings per share. It's losing $6 per share. That is a lot of money. So when you're losing so much money, it's better to sell less, because then you end up losing less. See, on the billion, they lost 300, on 470, 190. Oh, wow. Look at this. Here, the revenue 525, net income 523. Or their losses were equivalent to their sales, so all their expenses and everything else is not even covered. And let's look if they have a huge debt load. Look at this red thing here. It shows debt 469 million in 2019, 1 billion in 2022, 4.3 billion in 2023. So basically they're doing everything they can. They're borrowing money just to stay afloat. One stock that was positive was the champion. Here, this is relative strength. This is relative strength. Look at this. Look at the bought the stock in here. It was a really, really low risk, high reward trade right here. The stock ran away. It's up more than 70%. It's bye-bye. This train has left the station and we're looking for the next one. Do not chase NVIDIA. Do not buy it here. It can go to 1,000, 5,000, 10,000, but on a breakout like this, where are you going to put the stop? There is nothing on the way up and there is nothing on the way down. So if you are in it for the millionth time, I congratulate you, and you earned this. So enjoy this wonderful ride. And if you don't have it, just watch and see, and remember that anything is possible in the market. This was a $150 stock a year and a few months ago. Here in November of 2022, it was below $150 here, 130, 140, and here we break out and go above 150. Beginning of 2023, it was a less than $200 stock. Now it's a almost $900 stock. And NVIDIA is a really good example, showing us how earnings drive the stock price and not the other way around. This is the champion. This is a champion stock that we followed for quite a long time, since the beginning, actually, of our so-old channel, but we've done a lot of work. Looking here at number one, this was the increase in price, but I'm looking at this number, earnings per share and revenue. If we look at all other stocks that we followed, Meta, Amazon, Microsoft, Google, Apple, Tesla, it had the highest increase in earnings per share revenue compared to last year. And if we just took this and we projected at what price the stock had back at the beginning of 2023, it came out that $830, the valuation would actually catch up to the stock price. And believe it or not, NVIDIA has been selling even faster and making money even faster than its price increase. So what we see in this picture is just an acceleration of a price and catching up to, in parentheses, its fair value. But again, yesterday's pullback was broad, as we can see by all stocks in the Philadelphia Semiconductor Index selling off. And one stock of big concern, of course, is Apple. Technically, Apple is in trouble because right here, this 180 level was a really strong support. I'm going to go down to daily. This is our daily picture. So here we are rising from the lows of October. Here we are making our all-time high at $199.62. Here is our first pullback. This is beginning of 2024 right here. Here are the three downgrades this week that you see: gap down, gap down. Once we get into this area, a really strong rejection, such strong rejection that, look at this, it dips one, it rallies, it tests it the second time, and then it runs away, almost making all-time highs, $196. That's really close to its all-time high. And from there, we sell off again. We get into this area, we bounce, but that bounce was a lot weaker. And when the stock came here, there was a question, can it hold here and actually go on and make, or at least test this area right here, this 196 level, and maybe close above 200 and head on back on, continue with its mega trend, which is up. Here we look at back at 2019, it's a $40 stock, and then now it's a $170 stock. So on the short term, on the long term basis, this is definitely a mega trend move. It's in a huge uptrend, and the stock was the leader, making highs before all the indexes made the high. From December 14th, 15th, it stalled. And even though we are now, I'm going to go grab my favorite measuring tool that gives me a date. I'd say let's go before yesterday's sell-off. Boom. We are 78 days, and the stock drifting away from its all-time highs, or actually here it's selling off. It's on a downtrend, while all the indexes, let's take NASDAQ for example. NASDAQ 100 made its all-time high on Monday, March and April, made its all-time high back in December 14th, 2023. It's been 78 days. We know that Warren Buffett and Berkshire sold 10 million shares here. We could see that there is a huge supply of stock right here. So this was a very low risk reward opportunity, because we knew that if we're entering right here at 179, as close to 179 as possible. Low of this bar was 179.25. Low of this green bar 179.56, 179.53. So let's think for the stock down below this range, knowing that if it holds, you have a big move up above 200, which makes it 20 plus points, and a gap down opening sell for the next morning to open. And when we're gapping down below the low, you just market sell, and even if it reverses, it invalidated the idea. And this is the case with 4-point loss, gave us plenty of opportunities. And again, this was a great trade because this is a market leader and it's the stock that made all-time highs before any index last year made all-time highs. Now you get stopped out, and if you look at the stop was, let's say, opening price reported 176.15. So it's 176. You get out at 176. Now it's 170, and the stock is coming to a good buying place. It's the next buy, which is our November low. Now I wouldn't bid for it here. I wouldn't just stick a bid in here, but I'd say how this idea worked. Buying in here as close as possible to the low and having a stop of 5 points. In our case, losing 5 points and looking for a trade at 20 plus, because when Apple closes, and it will close above 200, then it will do what it naturally does. It will run to the next round number and it will run up to the next number. But that time is not right now. It has to go first and test this area, which is really close to, and it has to hold this area. It did not hold the 180 area. What we're going to see is it holds the 165 area. Now, if Apple cannot hold the 165 area, then it would be very difficult for all the indexes to go anywhere without Apple, because it's such a major and besides that, it's been a leader. It's been a leader this whole rally. So once all the craziness ends with Nvidia, and I think above $830, it's getting a little bit crazy. So when it does end, we will really see how broad and how strong this sell-off will be. But again, I think we're going to have to wait until Apple does something, finds a base, finds a good price level where it wants to say, where it finds some buyers that come in and say, look, this is value. And until then, I think it will be very hard for market to keep running and making its all-time highs without Apple. Now, that is not impossible, because that's what it's done in the past 78 days. So if this is a pullback like all others that lasts one day, we continue on with the trend, and that would be, again, in parentheses, normal, because that's what we've done. That's what we've done since November 1st. So be really cautious and really careful here. Definitely, it's not a good place to fish for Nvidia, no matter how many points it drops. It has to give us a pullback, and it will give us a pullback. And the reason that we know it will give us a pullback, it has always given us. And the one that was a great opportunity lasted from July of 2023 until this breakout here, January 2024. That's about 140 days. And again, that's also in the playlist on NVIDIA. We were looking for a good deal for that 140 days and how it was practically impossible to miss the breakout on NVIDIA. Let's see what happens today, if we get a follow through or if we get a reversal of yesterday's sell-off and we keep on running back up to the all-time highs, continuing 3 months rally. So until I see you next time, navigate with care and have a great day. Goodbye, everybody.